companies are in trouble. There's one car company, at least this week, is not in trouble. That's
right.
Tesla,
yes.
that you're invested in.
Yes.
So explain Tesla to me. I understand it's a really great car and it's really terrific. It's really forward-looking. If you look at the number of cars they make compared to the value of the company, compared to any other company, it's crazy.
Well, we just published a report with our, again, long-term forecast. And the numbers have gone up dramatically, and yet, we think it's incredibly undervalued. And the reason for that, there are two assumptions that have changed with in the last couple of reports. One, our bull case for Tesla in our old model was that it would lose a third of its market share. It had in 2018 17% global market share, including China. That it would lose as the Tesla killers came into the market, Audi and Porsche Taycan and Jaguar. Well, guess what? Its share increased last year to 18%.
So do you think Tesla can have 17 or 18% of the worldwide market when it's all electric vehicles? Is that what you're saying?
And if we are right, this stock has only begun.
But that makes you think that this isn't actually a vote for Tesla. It's a vote in all these other established car companies completely failing to make the crucial transition, which they've known for several years they were going to have to make.
Yeah,
I mean, can we really be that pessimistic about the likes of BMW?
They're failing miserably. And in battery technology, they're not riding down the consumer electronics cost curve, which Tesla decided to run down, and people made fun of them. Oh, you're putting cell phone batteries at the bottom of the car, cell phone batteries that blow up. No, they chose lithium-ion pouch, which is much more costly than Tesla's consumer electronics batteries. So if they want to compete with Tesla, they'll have to sell every electric vehicle at a loss. At the same time, they're losing their internal combustion engine business. The reason this is going to happen is because within the next 18 months to 2 years, the price of an electric vehicle, like for like categories, is going to drop below that for a gas-powered vehicle for the first time. And it will continue to fall because we're riding down the battery cost curve decline. So the traditional auto manufacturers, if you look at their R&D budgets, or you look at GM's, 10% of its R&D, $25 billion in, capital spending is allocated to electric. They should be at almost 100 now, given what's about to happen. And I think the reason Berlin, Germany, invited Tesla to build a factory 200 football fields, either soccer or our football, that big, is because they know they're in trouble. They've got to adjust, or else they're going to lose a tremendous number of jobs.
Cathie Wood, the founder of ARK Invest, has been a longtime supporter of Tesla and its CEO, Elon Musk. Before Tesla's earnings call, Wood often expresses confidence in the company's future growth, especially regarding its leadership in electric vehicles, EVs, autonomous driving technology, and energy solutions. She tends to focus on the long-term potential of Tesla, despite short-term market volatility. She often highlights Tesla's ability to maintain a competitive edge, improve its margins, and expand its market share globally. She may also discuss Musk's vision for Tesla's future, whether in terms of AI development, energy storage solutions, or the broader transition to renewable energy. Wood's ARK Invest often holds a large stake in Tesla, and she's been known for her bold price targets for the stock, sometimes forecasting it to reach significant valuations in the coming years. When it comes to Cathie Wood's perspective on Tesla's earnings, she typically focuses on a few key areas. Revenue growth. Tesla's ability to increase vehicle deliveries is a major focus. Wood often highlights how Tesla's market share in the electric vehicle space continues to expand globally, especially in key markets like China, Europe. Tesla's profitability has been a key point of discussion. While the company has historically had thin margins due to the high cost of manufacturing electric vehicles, Wood is usually optimistic about Tesla's ability to improve margins through advancements in technology, production efficiency, and scaling up its business in other sectors like energy storage and solar. Innovation. Wood often emphasizes Tesla's technological leadership, particularly its advancements in autonomous driving and AI. Any updates or progress on the development of Tesla's full self-driving FSD software are typically areas of focus. Battery technology and production. Tesla's ongoing work to enhance its battery tech, e.g., the 4680 cell, and reduce costs while increasing range is another important point for Wood. She's a big believer that Tesla's progress in this space will give it a significant edge over competitors. Musk's vision. Musk's ability to steer Tesla into new ventures and industries is another area where Wood shows confidence. Whether it's the energy division, solar and battery storage, or new vehicle models like the Cybertruck, she tends to underscore Musk's long-term vision for sustainable energy solutions. Shares of Tesla were moving higher today, overcoming a weak earnings report after CEO Elon Musk spent much of the earnings call pumping up the stock and making big promises about autonomy. The stock was up 4.7% on the news. It looks like investors are buying into the autonomy story. Tesla's fourth quarter numbers were disappointing, and the stock was down initially after hours when it reported earnings. For the full year, Tesla reported a decline in automotive revenue, and in the fourth quarter, overall revenue increased just 2% to $25.7 billion, which was well below the consensus at $27.1 billion. Automotive revenue was down 8% to $19.8 billion in the quarter. On the bottom line, results also disappointed, with operating margin down from 8.2% to 6.2%, while adjusted earnings per share rose from $0.71 to $0.73, missing estimates at $0.77. Despite the weak results, investors still bid the stock higher after Musk made bold promises around autonomy and told investors that the stock could eventually be more valuable than the next 5 valuable companies combined. The Tesla chief continues to be an evangelist for full self-driving and Tesla's autonomous vehicle technology, saying that 2027 and 2028 will be ridiculously good. He also said of the technology, "The only people who are skeptical are those who have not tried it." Musk and the rest of Tesla management spent little time discussing the automotive business on the earnings call, instead focusing on autonomy. Tesla didn't give specific guidance, but it did call for the vehicle business to return to growth in 2025, though it noted it wasn't fully switching new production to its next-generation platform, which means it won't be able to lower costs as much as it hoped. The company still faces a lot of uncertainty in 2025, but investors seem to be buying into the autonomy story. If Tesla can take steps toward full autonomy, the stock could move higher, though it still faces considerable downside risk. But Tesla expects its core vehicle business to return to growth in 2025, the company said in its earnings presentation. The company also announced it plans to begin production next year on its Cybercab driverless taxi vehicle and to begin making its less expensive cars in the first half of 2025. The market reaction was a roller coaster. Shares dropped 5% in after hours trading Wednesday, building on a 2% decline during regular hours before reversing to a 5% gain by Thursday's market open, as investors seemingly oscillated between the disappointing Q4 financial results and the positive production updates. Tesla stock was up more than 4% by late afternoon Thursday, a whipsaw that befuddled even the most established analysts on Wall Street. Morgan Stanley analyst Adam Jonas questioned in a note to clients, what else may be at work driving the debate around the stock, while JP Morgan analyst Ryan Brinkman's recap note questioned why Tesla shares somehow gained as much as they did. I'm not saying it's an easy path, but I see a path for Tesla being the most valuable company in the world by far, Musk said on Wednesday's earnings call. There is a path where Tesla is worth more than the next top 5 companies combined, Musk added. Tesla is the world's 8th most valuable company in the world, with a $1.3 trillion market capitalization, while the 5 biggest firms are worth nearly $15 trillion in aggregate. The highly optimistic Musk also teased the idea of a $10 trillion revenue opportunity for Tesla's Optimus humanoid robots. The move higher in Tesla shares bore no relation whatsoever to the company's financial performance in the quarter just completed or to its outlook for growth in the coming year, wrote Brinkman, who added Tesla's share price has become completely divorced from the fundamentals. Musk did not address some shareholders' conflict of interest concerns on the Q4 earnings call. The Tesla Shareholders Forum used for earnings call, questions include more than 100 questions on Musk, including ones asking how Musk's role in the White House cuts into time with Tesla, and if Tesla has lost sales due to Musk's outspoken views, though none on Musk's political activities were answered Thursday. Tesla, the most valuable automaker in the world valued at over $1 trillion, did not pay any federal income tax last year. Tesla's annual financial report, released this morning, shows the company enjoyed $2.3 billion of U.S. income in 2024, on which it reports precisely zero current federal income tax. Over the past 3 years, the Elon Musk-led company reports $10.8 billion of U.S. income, on which its current federal tax was just $48 million. That comes to a 3-year federal tax rate of just 0.4%, more than 50 times less than the statutory corporate tax rate of 21%. Tesla saved $500 million in taxes last year using accelerated depreciation. Tax breaks for executive stock options shaved $250 million off the company's tax bill. Unspecified U.S. tax credits were good for $300 billion of tax savings. Musk's company also used net operating losses to offset current year income, although it's hard to know how much of that affects U.S. income rather than the company's far larger foreign income. Congress might give Tesla even more tax breaks. A bill passed by the House of Representatives in the previous Congress would have retroactively reinstated a provision allowing full expensing of research and development expenses, which could save the company up to $2.4 billion in taxes.